Is this thing on? Yo, this thing on? This thing fucking on? Is this thing on? Ooh, I spy with my pretty little eye. I spy with my pretty little eye. I spy with my little eye. 9 o'clock candle just opened. We need to look for a 15-minute market structure shift bullish off of AUD USD before we start looking for anything on this one. But this is looking good. It's looking very good indeed. Yeah, that looks ugly as hell. I'd stay away from USD CAD just because of the consolidation. Yes, sir, bruh. And this one's tapped to the fair value gap too, dog. 15-minute needs to turn on this one too. 15-minute needs to turn here as well. So we're looking for 15-minute market structure shifts. We're waiting for some 15-minute market structure shifts on USD JPY and AUD USD right now. Let's go look at Euro. Let's see what the Euro doing. The Euro dollar. I got a mess up here. Holy hell. Let me delete everything. Ooh. So expanded, took everything out. Tapped into the fair value gap here. Just barely though. Let's see, has he gave a 15-minute market structure shift yet? It looks like it, but it also, look at what I'm seeing too. Look at what I'm seeing too. There's also this bearish fair value gap here, right? And off of that bearish fair value gap, we have 15-minute market structure shifted right here off of this candle, came up. This might be a bearish opportunity here. So we have the 9 a.m. open right here. So if it goes up, see it retrace maybe up into there's a fair value gap here and here. These are some good points of interest right here that if price tapped into them, I'd look for like a 1-minute market structure shift bearish for an entry. So I'm gonna set an alert right there. And then if we look at GU, GU looks like it's bullish, bro. GU looks bullish compared to EU. And then like with these highs from August 721, August 721, yeah, bro, there's some divergence here too. Oof, bro, I think this is gonna melt. I think Euro USD is gonna melt because if you notice, look at the divergence here. It created a lower high on Euro USD, created this higher high on GBP USD. There's some strong divergence here. SMT. Let's see what DXY. DXY made that higher low. Same time GU or Euro made the lower high. GU made the higher high. That's some good SMT divergence right there, gang. Might have to catch something on those ones there. But yeah, I'm waiting for AU and UJ to market structure shift bullish on the 15-minute before I even look for an opportunity. Let's see with Euro though. Let's see if we catch something with Euro today. How y'all doing this morning? What y'all looking at? How's gold looking? We have. I anticipate that gold is gonna have a 15-minute market structure shift bearish, come back in to tap into this mitigation block as well as maybe this fair value gap right here. I mean, maybe there's a tiny gap right here, tiny, tiny, and then it'll also turtle soup this swing right here at the same time to continue bullish. That's what I'd be looking for, but right now, since it's at a high external range liquidity low key, we gotta wait patiently for a 15-minute market structure shift before I even look for something. Let's see what Euro USD does though, bro. Let's see, man. Let's see, how is meme coins doing this morning? How are the coins of the memes? Coins of the memes. Damn, bro. I think for my funded challenge, I think I'm gonna go funded trading plus. Do y'all know if funded trading plus is? I assume that it's allowed here in America, but I think I'm gonna go with funded trading plus, bro. Funded trading plus is what we're gonna go with, main. Put on some music. Let's put on some music, bro. I need some music right now. I need a vibe. Just put just waiting patient, bro. It's all about the patience here now. Yeah, we gotta get lit right now, bro. It could do that all at once, bro. It hasn't tapped into a point of interest, bro. Don't trip. Don't get FOMO. In these moments, whenever you see a candle melting like that, a lot of motherfuckers will get FOMO, bro. Yeah, this might close right here and be like a little market structure shift, bro. But it's not valid, dog. Why isn't it valid? It's because it hasn't tapped into a point of interest, bro. It has to tap into a point of interest, dog, before it's a valid market structure shift. Don't trip, bro. Don't feel FOMO. Mm, 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 mm. You just gotta stay patient and wait for this to set up, bro. Mm, 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 mm. Da, 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 ba, 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 ba. Oh, I freaking love that one, dude. I love those hi-hats on this one, bro. What's this one called? Let's put it back. That's a cute outfit. Yeah, boy. Let's put up my game. Yo, tight, bro, tight. Stay patient, bro. Stay patient. It's almost there. It's almost at our point of interest, dog. Just gotta stay patient. Have the patience, brother. Have the patience. Lovely. There we go. Point of interest is about to get tapped. We took each other out right there. Alright, nice. So now we drop to the 1 minute. We're gonna look for a 1 minute market structure shift. Looking for a 1 minute market structure shift. Do you have to go to Stash House? That's why I figured you're dressing like that.
SpongeBob loose.
Hey, bro. See, bro, we need a 1 minute market structure shift. We're just waiting for that market structure shift, dog. You're wearing them.
Oh. That's why people make mistakes in life, you see? Like, fucking tired.
Yeah, they are. I love you. You're so beautiful. Okay. You were just saying how much you're gonna like express your gratitude. These are your last moments.
I get that. I do. I do. But at the same time,
I know it's a job. We don't want to go.
and they're gonna cost her commission. That's what they told her this whole time they weren't gonna give me fucking commission for anything.
Then why help them? Fuck them.
That's what
You shouldn't. You should call in, babe. Yeah, clear up your desk. Leave early, if anything, too. Yeah, seriously. Yeah, that pissed me off. I'm not gonna cap. I'm kind of pissed off now. Yeah, no.
need a job. I'm like, well, that's good then, because it's gonna be better for you whenever they start taking advantage.
Literally. And that pissed me off. I'm not gonna cat.
They told me that I would get my 18 until like
Until
I don't
3 months, like. Oh my gosh. That, bro. I'm kind of bugged. Sounds good, my love. We'll see you here in a bit then. Yeah. Alright, love you. We're just waiting patiently, dog. You gotta wait patient in this game with trading, bro. It looks like it's about to turtle soup, which is... I don't mind that. I like that. Ooh, you're so lucky, bro. I almost fucked that fool up. This is how I stay patient, you guys. I just play a game. I play a game on my phone. Ooh, it disconnected, huh?
Hey, it's Jared. Here's how to stay zen in college for less with Amazon. Lamp, oil diffuser, fake plants, extra comfy floor pillows, and crystals, the source of all my powers.
In crystals? $15 is market structure shifting. Beautiful. This is what we like to see, bro. If y'all in here right now, fam, like the stream. I appreciate everybody who likes the stream. I appreciate everybody who's watching. Shout out to everybody watching right now. We just waiting patient, bro. We just waiting patient for a nice trade, a nice setup. Ba, 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 da, 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 da. Let's go put on some psychology.
Over the market.
Chief Option Strategist here on Wise Trade TV, and using psychology in today's market is not an easy thing to master. It takes a lot of discipline and skill to become a consistent and successful trader. Here to talk to you about what you need to do in order to put your mind over the market is Mark Douglas.
Damn, Euro is
Mark
flying,
has been
huh?
a successful trader since the 80s and has written 2 books on trading psychology, both Trading in the Zone and The Disciplined Trader. You've heard me talk about them many times here on WTV, and he is here today to help you become successful traders. Mark, good morning. How's it going?
Good morning, Jared. Glad to be here, and I hope I can be of assistance to some of your traders who are viewing right now.
Mark, you know, last time we were together was at Wise Fest, and had a lot of fun. I'm really excited you're here with me today.
Thanks.
So let's get started. First of all, you know, one of the main issues that I see all the time is that people don't use their method to its full potential. In other words, there's a negative correlation between what the trader ends up with and what he could have had if he just followed his methodology. In your DVD program, you refer to this as the profit gap. This is a problem. You refer to it as the profit gap. And I think it's one of the least understood concepts of trading. Can you address this a little bit, this profit gap?
Yeah, that's actually a really good place to start because I think that more than anything, what your viewers want or what your customers want are consistent results. They want to be able to produce an income that, you know, that they can rely on from their trading. And I'm sure that you know, many of your viewers have already realized that getting a steady income is not such an easy task.
Yeah, and everyone seems to get trapped thinking that because trading is easy, or because it's easy to find yourself in a winning trade, which many people do.
Right.
You know, they think it's also easy to become a consistent winner.
Right.
And you know, it took a long time before it actually.
I'm not in a trade yet, Ahmed. I'm not, bro. We're waiting patient, bro. This Euro, we're waiting for it to create this open high.
In some ways,
I know where it's at. I'm anticipating it to go lower.
It seems like there's no relationship
So
between the two.
it's been a while, outside. It definitely has, fam. What up, what up, what up? How you doing? Y'all doing good right now? Y'all chilling? Y'all vibing?
Because winning actually requires no skill at all. In other words, unless you consider that, you know, the being able to click a mouse button
You vibing,
or, you know,
bro.
tap a pad
Good
is a
stuff.
skill.
I'm happy to see everyone in
and
here.
we don't have to have
Yeah,
a
bro.
reason or
I'm
good reason or
anticipating
actually any reason
right now this turtle
to
soup.
put your cursor on the
I
buy
want
or
to see
sell
it
button,
start melting,
and then
bro. Good
immediately
luck,
find
man. I
ourselves in a
appreciate it.
winning
We're
trade.
up
And it could be a
9% for the
monster
week,
winning
bro.
trade. And what did it
Staying
take?
patient. If we don't see anything, dog,
you know, what kind of
obviously
skills
we're
did
not
it
going to
take
take a
actually
trade, but
experience this? Absolutely
even
not.
AUD
So it'd be natural to
USD
take the
has,
leap from, well,
in 2 minutes, it's going to be a
this
market
easy
structure
to
shift
win,
bullish.
it can't
So we
be
gotta
that
stay
much
patient.
harder to make a steady income. Like you said,
Create
if it's
this,
that easy to click the mouse and for me to sit there and make $5,000 or $10,000,
this breaker
then
block
it must
right
be
here on
pretty
the
darn
15
easy
minute.
for me to sit there and make a living out of this.
We'll set an
You know,
alert
and that's
right
what I
here for
thought for a
price to
long
tap
time,
into
but
it.
that is not the case.
No, and that's exactly how
Price
I started
taps
out,
into
too.
it.
And I know, unlike a
Dairy.
lot of other people who are willing to, let's say, give up a real high-paying career to be a trader because they thought it couldn't be that hard.
So what makes consistency so challenging? What's the big hurdle there?
Well, we're gonna get into that, but at the most general level, I'm gonna say that it requires learning the type of skills that people
requires
just simply aren't
learning.
used to learning.
What up, Ansab? How you doing,
In
gangster?
other words, it requires mental skills.
Damn,
Most
we got
people
14
assume that
people in
because
here
the
right now.
technical
That's
method
tight, bruh.
gives them a
That's
signal
tight.
to get into a trade.
I hope
that
all
if
of
the
you are
method
doing good
produces
this
a high
morning, bro.
percentage of winners, it will equate
I'm gonna
to
try to catch
consistent income,
a winner
not
for y'all
taking
this morning. I'm gonna try to catch
consideration that
something,
the
try to
proper
put y'all on to
execution of
something.
those
Let's see.
signals requires mental skills.
We're staying patient right now, though, bruh.
Well,
You
take
gotta
for
stay
example,
patient in this
you know,
game.
a high school basketball player who, you know, he'll go in the gym and practice throwing his free throws, maybe for even 2 or 3 hours a day.
Y'all know Mark
It
Douglas?
wouldn't be
Listen
unusual
to
for him
what
be
he's
able to hit
saying,
50
bro.
in a
I
row,
need to
right?
shut
I mean,
up. I'm sorry.
That's
You
not
see that all the
out of the
time.
realm of reality, right? Okay, so the problem is that could he even hit 2 in a row if the circumstances were he was in the final game of the NCAA championship, his team is down 1 point, there's only a few seconds left on the clock, and he was just fouled.
Changes everything.
Yeah, under those circumstances, without the appropriate mental skills, hitting either one of those free throws is very unlikely. And regardless
It's
of
super
how well
hard.
someone could do it in practice, most people would choke.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused on the process, staying positively focused on the process itself, in this case, of throwing the ball, in our case, obviously, of trading or following your method,
Right.
and not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Exactly right, just like what I'm going through right now.
Here
Trying
on
to stay
TV.
focused.
So just to kind of like go over that message again, like Mark Douglas is pretty much saying is like, bro, whenever it comes to real game time, like practice versus live game time, it's a way different environment, bro. And that goes for like demo trading versus live trading. It's a whole different environment, bro. But like they're saying here, you just gotta keep chucking away at it, bro. Like whenever something falls in alignment with your setup, you take it. You take it. You take it. It does not matter. You always take it. It don't matter how ugly it looks. It falls in line with your setup. Take it. And the reason why you take it is because it's a game of probabilities. We are playing a game of probabilities, okay? It probably won't go in your direction. It probably will go in your direction. We don't know. What we can do, the only thing we can control as traders is our risk management. So you must control your risk, bro. If like if you're not controlling your risk, you're failing already, bro. You need to control your risk. The first step of every trader needs to be risk controlled, bro, straight up. That's what he's pretty much stating here is like whenever it comes to real time, game time, all that shit, bro, like a lot of people choke. And the reason why is because they're afraid or the environment. Like it's just a lot of background noise that's preventing you from achieving success, right? So that's pretty much like he's saying, just chuck it. It doesn't matter. You miss 100% of the shots you don't take. So just keep chucking away, right? And that's literally what he's stating there, bro. Just make sure your risk is managed, dog.
Yeah, trying to stay focused on the process of this presentation and not blowing it.
Well, you're doing fantastic. By the way.
Anyway, with training, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method or trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear.
Yep.
Okay.
Love it.
That's
So
interesting.
you see, no matter how good a technical method is at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with. For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take the loss that ends up turning into a bigger loss.
Right.
And
Here comes the
that's happened to
market
everybody,
structure
okay?
shift,
Our method
gangsters.
can't prevent us from moving a stop closer to our entry point where we get stopped out and the market trades back in our favor. Our method can't prevent us from hesitating and getting in too late.
Break even's a
Or our
scam.
method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops.
Here comes
And
the
our
market
method can't
structure
stop us
shift,
from getting out
bro.
of a winning trade
As
too
soon as
soon
it
and
taps
lose
into
money
this
on the
point,
table.
that's our entry,
Nor
dog.
can it prevent us from letting a winning trade turn
Market
into a
structure
losing
shift
trade
has
without
happened.
having taken any profit.
I know that
Entry
all
is
our
right
traders
here.
have
Stops will be
experienced
3 pip
these
stock.
issues. I know they have, and I think
We're gonna
really
target
what you're
back to
saying
the
is
open, okay?
the methodology.
If
and
once
this
it taps
methodology, folks,
into
what we're
our
talking about, when we say
our
the word methodology,
area
is the
here,
Wise
okay?
Trade
I'm gonna
software,
send it in the
is
chat.
that's our method. And it can give us winning trades. We've seen, I know all of you have had winning trades, but it cannot give us consistent results if we're susceptible to making the kind of mental errors that you're talking about here. Okay?
Exactly right. Yeah, that's exactly what I'm saying. And all the mental errors I just listed are the result of thinking, a result of thinking, believing, or assuming that our technical method is telling us what's going to happen next on a trade-by-trade basis, and not understanding that technical methods aren't designed to do that. Technical methods and patterns are designed to put the odds of success in our favor over a series of trades.
Risking 1% on
It
this
may
one.
not
I
seem
just
like
set
it
the
on the
sell
surface, but
limit.
there's some profound psychological implications here. What this means is
1 minute,
the
really?
outcome of the
Yeah,
signals
bro.
generated by any technical
You don't trade the
method
1 minute?
on a trade-by-trade basis
What's up with that?
are unique
Okay, now
and
here's a little
random.
fair value
In
gap
other words, there's no way
that
to know
I'm
in
gonna
advance
prioritize
what the
actually
outcome to
taking
any
entry
particular
off of the
signal
fair
will
value
be,
gap
or what
instead.
the sequence of wins or losses will be over a series
Because
of trades.
I like to prioritize
And
whatever gets
I
tapped into
understand
first.
what you're
That's where my
saying.
entry
I
is.
think,
So entry will be right there.
we need
Stop
to,
will
first
be
of all,
4
know
pips
that many
instead.
of our
Nah,
viewers out there
we'll leave it at the
are
3.5.
experiencing the same
Nah,
sort of
we'll go
thing.
4 pips,
Okay.
whatever. We'll give it some breathing room.
And they're probably going to have some trouble grasping
So if price
this
taps
concept
into that fair value gap,
by accepting the randomness of these outcomes, they can produce consistent results. That's
4.09.
an odd concept.
Yeah, that's exactly what I'm saying, Jared. I know it's somewhat of a paradox to think that events
Let's
that
see
have
what
a random
happens,
outcome
man.
can produce a consistent result. But think
We
about
want
it.
to see it
This is
tap
the
into our
principle
fair
that's been
value
used by
gap,
casinos
maybe
for
even our
hundreds of years.
breaker, and then continue
Technical
melting.
methods and patterns
Fill
will
up
give
all
the
of this.
individual trader the same kind of
We'll
advantage
see what happens,
the
bro.
casino has over the individual player. If the trader can think about it from the proper perspective. On the other hand, if a trader who has, let's say, who has generated his signal from a technical method, hasn't learned to integrate this principle, this randomness principle, into his trading regimen, he'll undoubtedly find that trading can be one of the most frustrating, if not exasperating, endeavors he's ever chosen to undertake.
You know, and I know there are a lot of viewers out there who may be experiencing frustration. In fact, I know there are definitely viewers who are experiencing frustration, but I'm not sure if they're making the connection that the reason because, you know, they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique.
Stepping it up, bro. Stepping it up.
Random and unique. You know, that's I think the big issue.
No, I know, and that's why we're here explaining it right now.
Stepping it up.
You see,
We
the
stay
frustration
patient.
comes from expecting. From
We
an
gotta stay
expectation, from
patient. Sit on your
expecting
hands. Wait for
something
it to
from a
come into
technical
our
method it
entry,
just
bro.
can't do.
Just wait
Technical
patient.
methods define and identify patterns in collective human behavior. Right. Now, the patterns definitely exist.
Let him cook.
They repeat
We
themselves
cooking, bro.
over and
We
over
about to
again.
cook,
The
dog.
problem is,
Watch, bro.
the outcomes don't always correspond with
Just
the
stay
patterns
patient,
on
my
a
friends.
trade-by-trade basis. So what I'm saying is that, yes, we have patterns. Yes, they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent.
All right.
I should have an outcome that's consistent with the pattern, and that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship
I'd say that's
between the outcome
because
and the
of spread, we're not in there
If
yet.
the
Okay,
last trade was a winner.
I'm gonna
This
be
trade, even if the charts are the same,
I'm gonna be
even
fair
if we've
and
got the same
logical
exact
about it.
signal, the same looking chart, there's
Tapped
no
it, but
guarantee.
like let's just
that this
say because of
trade is
spread,
going to be the
it didn't
exact
tap
same
us
as the
in yet,
past
right?
trade.
Exactly. In other words, this trade, the trade I'm in right now, could turn out to be a winner. And does that mean that the next trade's going to be a winner? Absolutely not. This trade I'm in right now could end up being
see,
a loser.
bro. Let's see what
Does
happens.
that mean that the next trade is going to be a loser? No, absolutely not.
Yeah. This is interesting. I mean, I'm trying to, for us up here, you know, the goal, the main goal is obviously to take these concepts and reduce them down to the most simple of terms. So, you know, let's again back up here for
You
a
guys
second.
think this guy who's talking and interviewing
There are
Mark
traders out
Douglas,
there
y'all think he's
using Wall Street
profitable?
every single day?
You think
They're
he
getting
still
the same
trades?
exact patterns, okay? But what you're saying is even though
Think
the
he's a
specific
millionaire?
criteria is being used to identify the pattern.
All right, tag us in.
Same
Come on.
criteria, same,
We want to see
same,
this shit
same formula,
get
same
tapped in
everything.
and melt.
The
The
chart pattern
outcomes,
can look exactly the same. Yeah, everything.
right. The outcomes to each signal have no relationship to one another.
That's right. That's exactly what I'm saying. That there's a random distribution between wins and losses.
All right,
over
boom,
any
we're tagged
sequence of
in.
trades
We are
that
in
you
there.
might look at. And so, you know, and again, this is a very difficult concept to grasp, but it's really the traders who have grasped it, let's say, and learn how to think in what I call probabilities. Okay. They're the ones that don't experience the same kind of emotional trauma that the typical trader does because they're expecting something that just may not happen. So, for an example, if
We're in there, y'all.
this
Let's see.
trade's a winner based
see what
on
happens.
This particular trade I'm in right now, based on the exact same criteria that, you know, or let's say I'm in a trade right now, or I'm getting into a trade right now, and the exact same criteria exists in the market that did the last time, I'm going to naturally expect it to be a winner if it was a winner the last time. Or I probably will naturally expect it to be a loser if it was a loser maybe the last time, or we had 2 or 3 losers in a row.
And this could be a source of frustration for traders.
Oh, absolutely. In other words, and that's exactly
It is
what
a source of
happens.
frustration.
It is a source of frustration because if I'm expecting it to be a winner and it turns out to be a loser, I'm going to be frustrated. Not only going to be frustrated, I'm going to be disappointed, and I may even feel betrayed, depending on how much kind of energy that I put into the idea that the trade is going to be right.
Well, how do we get over that? I mean, how does a trader take, you know, okay, so I've got all the things right. I've got my charts lined up. I've done everything I was supposed to do. How
And
does
tapped
the
into
trader at least begin to
Walk
accept
right
these
there.
sorts of things or how do they begin to remedy these issues?
Well, we kind of have to get into the nuts and bolts of this, of just exactly how the markets work, because I think
1 minute needs to
one of the
market
big
structure
problems,
shift
one of
off
the
of
reasons
this
why
one.
people have such a difficult time with this is because their initial
We'll see, bro. We'll
exposure to
see.
the
Right now, I
markets
want to see what
themselves
Euro's
is
going
through
to do. Euro going
electronics.
to fall.
In other words, there's through
Euro gonna
electronics,
melt,
there's
dog.
a real disconnect
We cooking.
between what
We
you're
cooking.
actually participating in and what's causing you to want to participate in the first place. In other words, markets started as exchanges. And there were, and so when you traded at an exchange, so you know that all prices are people-generated events.
Correct.
They are, and see, this is what people have to take into consideration. Everything happens because of what people believe. There's when you look at the nature of trading and break it down
So
to
yeah,
its
single
simplest
candle
components,
market structure.
what you have is everyone trying
Candle
to do
wicked
the same
above
thing.
this one
There
and then
is
closed
no
below
possible
it.
way that any of us
That
can
gives
make
good
money as
signs for
traders
bearishness, bro.
unless we can buy low and
Because the
sell
lower
high,
time
or
frame,
sell high and buy
what the
low.
lower time
Is there-
frame
is there
did was
any
a
other way,
market
Jared?
structure shift
No,
bearish.
In every market.
Is
In
what
every
that
market. So
candle
basically,
represents.
everyone's trying to do the same thing, are they not?
Yes.
Everyone is doing the same things. Now, the reason why we have price movement is because everyone has a different idea about what is high and what is low. Okay,
Right.
so now I get exposed
I'm always
to a
high,
technical
never
method.
low.
Now, what does this technical method do? And this is the relationship that people need to grasp. If they grasp this relationship, then they can grasp this idea that you can take the same set of criteria and end up with random results. And it's this. It's like what people realized years ago is that you can take data points. In other words, data points meaning what you're doing is you're translating the human
This
behavior.
candle made a lower high wick, closed below.
I'm going to buy
Good signs for
no, it
bearishness.
doesn't have to be visual, but it's like it could be. Yeah, it started out being visual. It started out being chart patterns based on bar charts. But what you do is that if I'm gonna buy, it's because right now, let's say the last price is 10, and I put in an order to buy something at 10. Okay, it's because I believe that the market's going to go to 11 or it's going to go to 12. Certainly, if I thought or I believed it was going to go to 9, I would wait, would I not?
Correct.
So the reason why I'm buying at 10 is because that's what I
I
believe.
want to see it take
In
out
other
this
words-
low here. Once
in
it
other
takes
words,
out this low right here, bro.
all price
Oh yeah,
movement
we're
is
running
based on
straight for take profit,
people's
dog.
belief about what's going to happen in the future.
Now, you said to me in a conversation we had yesterday, obviously, we as individual traders are not large enough in our accounts to move the market.
Exactly. And
Okay.
so this is the next connection that people have to make is that since all price movement is based on people's
That's ugly.
conviction
We
or
don't like
belief
to
about
see
the
that
future,
candle. That's
how
very
do
ugly
prices
candle.
actually move.
I just
For an
closed.
example, when you put in an order or I put in an order, I don't trade at a level where I can actually move
It's like
prices.
a bullish market
But
structure
what the
shift. But in a
typical
bearish
swing-based
sentiment, I
trader
mean,
doesn't understand is that
I don't
there
think it's
are
gonna work
traders,
well.
there
I
are
think
many,
it's just
there are
gonna get
thousands of
melted
traders out
upon.
there who do move prices, and that it is their intention to move prices. Or you can have a large group of traders coming into the market and then cause prices to move. But what actually has to happen for prices to move is this, is that if the last price of something is 10, for the market to actually move to 11, all the offers have to be taken out, meaning that, or move to 12, all the offers at 11 have to be taken out. So in other words, people who are trying to sell at 11, they have to get their orders filled before it can get to 12. Well, for someone to actually bid it to 11 or bid it to 12, they are doing the exact opposite. And this is really critical.
Ethan,
They are
putting
doing
your
the
package
exact
in your
opposite
room.
in that moment of what it takes to be successful. They're not buying low, they're buying high. They're buying high
Inside
relative to the
closed
last
candle,
price.
pretty much just
Or buying
accumulated.
higher relative to the last
So how
price.
does understanding this concept, how does understanding what moves the markets help our traders to take it to the next level? Is this the first step for them getting control and understanding how the markets work and getting a grasp
they
of it?
definitely have to understand. They have to understand how prices move, because when they understand how prices move, then they'll understand how their technical method relates to this movement. Because what technical methods do, whether it's a visual pattern or moving averages or any wise trade or whatever, you're using mathematical formulas. Okay, you're taking data points. In other words, you're taking what people believe about the future, transforming them or transposing them into a data point. As a price over time, okay, or with volume. There's any
Or a
number.
fresh cross.
Yeah, there's any number. That's what it ends up being as a fresh cross. But I'm talking about the actual mathematical formula that makes the fresh cross. Okay. So there are any number of variables that go into this equation. Now, what people have found is that, and this is here, what people have found is that using these data
This
points,
next candle will
into
probably
certain
take
types
out the high of
mathematical
this
equations,
candle.
you
Yeah.
can find patterns in collective human behavior.
The reason why
And what
to
these
kind of
patterns
show
mean
y'all
is that
why this candle is going
when
higher
when
is
this
because
set of criteria
this candle
is
right
present
here
in the market,
Every
there's
candle is a
simply
range,
higher
pretty much.
probability
And whenever
than
this
not.
black
In other
candle
words, there's a
closed
higher
inside of
probability,
it,
or
that's
whatever you wanna call it,
accumulation.
yeah,
This
higher
candle wick
probability of one
below,
thing happening over
that's a
another,
liquidity
that
grab to
people,
target
that
the
other
high to
people are
this
actually
end.
going to come
This is
into the
all
market
happening on the
and
second
bid it
time frame,
higher
like
from here, or
seconds,
offer it
bro.
lower
We're
from
talking
here.
seconds.
There's just, in other words, when the pattern
So
is present, this collective pattern is
we
present,
could get fucked right here,
it will
bro,
repeat
and
itself. But the
this would be the
problem
first
is
fuck
that
like the whole
it
week,
repeats
pretty
itself
much.
on a random basis because
We'll see what happens,
because
bro. We
even
just gotta
though
stay
the
patient. It's all a game of
actual
probabilities.
mathematical criteria is
Still up
exactly
9%
correct, or
for the week.
exactly the same.
You can't. That doesn't. Mathematical models can't predict human beings.
That's right. Mathematical models can't predict who the actual individuals who are going to come into the market and actually do it. In other
This
words, it
candle
takes someone
closes
to do
right
it.
here. The
When you
next
put on a
candle will
trade,
likely
if
stop
you're
us
not going
out.
to make your trade a winner by bidding the market, if you bought something by bidding the market, you know,
Using all of my money.
using all your money to, you know, if you bought something at 10, you could actually wipe out all the offers and bid it to 11 or bid it to 12 or bid it to 13. Now the price is
I'd
at
be
13. All the trades
truthfully
that you put on at
surprised
10
if
are
it just
winners,
like
right?
closed
But I still
Okay.
bought it at 11.
below
Yeah,
back
well,
into
you're
our
averaging out, but the
fucking
point is, all the
entry
trades
near
that you
our
put on
entry
were
or
winners. You actually
something.
made yourself a winner.
That's correct.
But
I'd be
what I'm
truthfully
saying is that
surprised
we
if
don't
it ate
trade at
this
that
whole
level.
candle right now.
We are actually obliged to other traders to come in to buy something at a worse price than what we thought was low to make us winners.
So what you're saying is most of us out there are dependent upon someone else
Exactly.
to move the market for us. We're trying to identify
Market
that
structure
pattern.
shift point is
obviously,
up
using the
here
wise trade
for
software to find
ADUSD.
those
We'll see what
combinations. But
happens
again, it's
there.
a random event. But we're,
yeah,
we're
it's a
putting the
random-
edge you said.
So
in our
Euro,
favor.
let's
Jared,
melt
when
for
you
the
put on a
game,
trade,
dog.
Okay, when you put
Let's
on a
melt
trade,
for the
do you
gang,
know
Giro.
who? Now, what we've done is
Let's
we've
do it for
reduced
the
the market
gang.
down to these terms. Okay, that it takes someone else to make us a winner, right?
Correct.
Okay, when you put on a trade, you think about who that
Let's
might
melt
be,
for
who
the
might come
gang,
into the
bro.
market to actually make you a winner.
No, of course not.
Yeah,
All the
no.
way down.
And if it turns out to be a winning trade, do you know who those traders were, or who that trader was that actually made you a winner?
No.
Is there any way to know?
ICT
There
5
might be,
minute
but it'd be
really
pretty
is
hard to
way.
find
1
out,
minute
right?
too
I
choppy
mean,
though.
you
Bro,
can go-
whatever you
can
say,
go- yeah,
dog.
well, you can go to the consumer firm, you know, the firm that clears.
Bro,
the,
I'm
you know,
so
bottom line.
consistent. I
Bottom
don't
line,
give a
yeah,
fuck. I ain't
exactly.
taking
So
nobody's
what I'm
opinions
saying
no
is that-
more.
is that
It's
when-
choppy for
when
you,
you're-
bro.
when the pattern
It's
presents
not
itself,
choppy for me,
like,
bro.
okay,
I know
have an
exactly
answer.
what I'm
When
looking
the pattern
at, dude.
presents itself, we don't have
If it's
any
choppy for you,
idea
it's 'cause you
about
don't know
who
what
is
you're
actually
looking
gonna
at, bro.
Come into the market to do this for us.
Learn what
And so
you're
there's no
looking
point
at,
in
and it won't be
analyzing.
choppy, bro.
There's no point in judging. There's no point.
Dude, I
in-
took
in,
trades
you know,
all
trying to
week on the
figure
1
out
minute time
whether it's
frame.
gonna work or
I am
not.
up
It would be
9%
like,
for the
an
week,
example,
bro.
If I said to you, Jared,
You
I'm gonna
really
give
think
you
the
a
1
coin,
minute is choppy for me,
and
dog?
this
Come
coin
on
is
now.
weighted in a way where it's going to come up heads 70%
Come on,
of the
bro.
time.
Don't
Just
disrespect my
because
trading,
just
dog.
because I know mathematically and statistically that this pattern of coming up heads 70% of the time exists, is there still any way for me to know the actual sequence to heads to tails?
Of course not. It's an infinite.
Well, no, I'm saying,
mean,
do I know the sequence? In other words, I'm going to flip the coin 100 times, and statistically it's going to come up heads 70% of the times. I still don't know
If
which
5 minute
which
works for you,
flips
though,
are gonna
dog,
come
I'm
up
never
heads.
knocking
Which
you for
flips are
using
gonna
it,
come
bro.
up heads. This is which flips. It's not the time.
Always run with
Which
the
ones?
5
In other
minute
words,
if the 5 minute
which,
works for
you
you,
know, we
dude.
flip the coin once. It comes
1
up
minute
heads.
works
Flip the
best for
coin
me
twice,
because
it
my
comes up
time frame
heads. The next
alignment
one's
is
tails.
4
The
hour,
next one's
15
tails.
minute,
The next
1
one's
minute.
tails. In other
I'll
words, we
use the
could have
5 minute
streaks
if I
of
need
heads
to.
or tails. Okay, we could
But I
have,
only
we
use
could
it
have
for a
streaks
point
in
of
there.
interest.
The
I
point
never
that I'm
take
making
entries off the
is
5
that
minute unless
there's
I'm
no
using a
way
higher
to
time
know
frame. And
the actual
realistically, I'm not. I'm
sequence.
trading one
But at the end of the
specific
day, we know we have
hour.
70%.
And it's
So what
going to
that
be
does,
that 4 hour,
that
9 a.m. Eastern
obligates
Standard
us,
Time
if
candle.
we want to be able to trade our methodology in an effective fashion, to be able to utilize this methodology in a way where we can extract the maximum amount of profit that it makes available to us based on the pattern that it identifies. We have
Watch,
to,
bro.
we have
Now
to
I'm
do it
really
certain
hoping this
ways.
trade busts
In other
just
words,
for you, dog.
our mind has to be free to be able to execute these trades without making trading errors. And the trading errors come from believing that because the pattern is present, that it's going to give me a winning trade on this one. This trade is going to be a winner.
You can't think that way.
No, you can't think that way.
You can't think that
That's the
Time
way the
is
typical
literally
trader
fractal,
thinks.
bro.
The
If
typical
you could
trader
do it
thinks,
on the
"I'm not
5
gonna
minute,
put
you could
this
do it
trade
on the 1 minute, bro.
unless I think
It's
gonna be a
literally
winner."
fractal,
Well, why
dude.
would I do it?
If you could do it on the daily, you could do it on the 1 minute.
It
It's all
skews our
fractal,
expectations. See, it messes
bro.
our expectations
Let's
up.
back up a couple seconds here. There's some great stuff here, Mark, and I hope our traders are getting all of this. You're basically saying, and this makes a whole lot of sense to me, and I hope it's getting through to you guys, we have a tool that gives us an edge. whatever it is. Even if that edge is 2% or 3%, I don't know if we can.
No, it's more than that.
Maybe more than that.
What do you mean more? It's a lot more than that. It's far more than 50%.
Well, I was saying greater than 50. I was using edge is defined as
okay.
So maybe
Speed up that whole
55,
ring count,
56%
dog.
of the time. Let's just say
And the thing is, it doesn't even have to be 50% to actually make consistent money. That's what people can realize too. That depending on what the ratio is between what you have to risk to find out if a trade is going to work and how much profit it generates when it does, you don't even need a 50% win-loss ratio. Right. As a matter of fact, back in the 80s, there are one of the most famous traders from the 80s, Richard Dennis, on a percentage basis, 95% of his trades were losers. 95%.
95% of his trades were losers, bro.
Monsters. And he was able to take
The winners were
he was able to
monsters.
put on trades
Dude, that's exactly what I
at a
mean, bro. Your
95%
strategy
loss
can
ratio
lose freaking
and make-
95% of the
most
time,
at
but
one
the
point, and I
5%
think
you
around
better hope
1987
those
or
things hit
1988,
like
he had $400 million.
monsters.
Is that using his edge or his money management or a combination,
of all of it.
Okay.
And see, one of the things he did too, and this
Waiting
is
for a
something
bullish market
I
structure
ought to
shift on
qualify with.
AU.
He would use
See if we
orders
even
to
get it,
actually
bro.
probe the market. See, there's one of
We'll
the
see
things
if we get it, bro.
I don't want to leave what we're doing right now, but I'm going to just kind of divert just for a moment, and so that people understand that one of the first things to be a successful
hoping
trader that you have to
that
learn,
this
other than
fair
the fact
value
of
gap gets
finding a
closed
good edge,
below.
meaning something that puts a pattern.
If it gets
a
respected, though,
collective pattern
we're likely going to get
that
stopped out.
that your edge identifies that puts the odds in your favor. That there's a higher probability of one thing
I'm
happening
hoping that
over
it gets
another
closed below.
once this
We'll see
pattern
what
is
happens.
present in the market.
The markets don't
Is
give
that
a
you have
fuck
to learn
about
how
your
to think
hope,
in
dog.
probabilities. In other words, you have to get your expectations aligned with the way the market actually exists. Right. And when you do, in other words, when you learn these kind of mental skills and you're able to execute your trades without fear,
Yeah,
without
going to
hesitation,
1 to 20
without
risk to
analyzing, or
reward.
even without thinking, for
Straight
that
up,
matter, 'cause
bro.
you don't need
Dude,
to
I
think.
was,
I'll give
for
you
a
an
while
example.
there,
A
I was
professional
like,
trader,
bro, I bet you I could
what
create a
professional trader
strategy with
thinks
just
about
an EMA.
when there's an edge present
Like, once price closes
is,
over the
does he
EMA,
think about whether the edge
take
is
the
gonna
entry
work?
and put like a
Absolutely not.
2-pip
He-
stop loss.
because he knows
You'll
that
get
he's
stopped
learned
out
that
like
you can't.
crazy,
There's no
bro, and it
point
might mess with your
in
psychology over
analyzing
time.
or
But
judging
dude, the trades were like 1 to 30
or
yards.
building a case for or
Because whenever I
against whether the
first
trade is gonna
initially
work.
watched this video,
Because he
it
understands
had
the
me
human
thinking. I was like,
component, okay? But what he does think about is he
something
thinks
that
about
happens all the
how
time in
much
the
do I have
markets
to
that's
risk?
pretty
How far
mechanical
am I
as
gonna
opposed
let the
over an
market go
EMA.
against this
You know, it
position to
always
tell me that
happens.
other traders are either going to come into the market and
But
make me a winner
it just
or
doesn't
not.
happen
And he
during
also has
certain
a plan
times
for
that
how he's
I'm
gonna take
looking to
profits.
trade. It'll
So
happen
the
whenever
typical
I'm
trader,
sleeping.
what
It'll
does the
happen
typical
whenever
trader
I'm
do?
at work.
They
It'll
don't
happen
have a
whenever
plan.
I'm
Or
streaming.
they
When they
It'll
think
happen,
about the
it'll
trade too
happen
much,
all
they
the
think
time,
about, is
dude.
this going to be
So
a winner? Is this going to be a loser for me?
The exact opposite of the
So
professional.
what the professional does is
And
basically
then once they make up their mind that it's a
I'm
winning
just
trade, they
looking to
don't
trade during
find
this
the risk, do they?
specific hour,
And
bro.
they also
I
don't
just
have a
want to
plan
trade
take
during this
profits because they
specific
think
hour,
when
think it's
bro.
gonna be a winner.
it's going to go on
And I
forever.
want to talk about that. We're
I could
running
trade
up
for
on the
like
break
1.5
here, but I want to talk
hours a
about that on
day
the other side. But what you're saying is the bottom line is
be
the
rich as
professional
fuck.
sees the entry.
That's
He
solid
sees
for
the
me,
pattern,
bro.
whatever it is, the edge,
That's
enters in,
perfect for me,
not thinking
straight
if
up.
I'm going to win or I'm going to lose, but
Yeah,
has
it
a
looks like
money
this fair
management
value gap's
strategy
gonna
in
be
place,
respected.
knows exactly how much he
Looks
wants to
like we're
win
gonna get
or is
fucked
willing to
right
win,
here.
how
It's
much he's willing to
okay.
lose
It's
or
okay.
risk.
Right.
Now, does he
The
put
game
a
of
cap on the upside?
probabilities, bro.
Does he
We
put a
win
cap on his
some
downside?
and we
It's
lose
not a
some.
matter of
Always
the gap,
remember
it's a
that.
matter of
Always remember
his
that, bro.
assessment of how much potential there is.
Always
In other
remember
words,
we win
see,
some
the
and lose
problem is
some,
on a
okay?
winning trade, we're
Taking that
obligated in a
loss,
sense
we're still up
to make these
8% for the
never-ending
week, bro.
decisions as to, what the
If you
risk to
caught
reward
every
ratio
single
is.
trade
In
with
other
me
words,
this week
as
on
the
stream,
market's going in my
you'd
favor,
still be up
what's the
8% for
risk
the
of
week
finding out that it's
if
going to
this
go
trade
further?
gets fucked.
And that's why so many professional traders or people who teach trading advocate scaling out of positions.
I'm not gonna cap.
Mark,
I already
this is all
low-key
great stuff.
accepted
We're
the
gonna have
loss.
to wind it up. We got to go to a break. Guys, it's
I feel
already
like
time.
it's
As I
gonna
said,
stop
for a
me
break.
out.
We'll be back with much more.
If it comes all the way down, that'd be a
Here in
miracle.
3 minutes. We'll see you soon here on WTV.
Let's see, bruh. Let's see, bruh. I'm waiting for AU to give a bullish market structure shift. You consider this the bullish market structure shift, but yeah, I don't like that. It's ugly. It's terrible. I'd rather go for this one up here to create
There's nothing more powerful
the
than
last
you
up close before the
making
down
your
move would be
thing
that
happen.
block
Really?
would be the black.
Welcome back to the WTV special on putting your mind over the market. I'm Jared Levy. Mark Douglas has been talking about psychology in today's market.
Oh, look at Euro
Mark,
USD.
let's continue with our
Let's see it
conversation.
melt,
we
bro.
left off
Let's see
with.
what it does.
We were
Let's see what it
talking
do.
when we left about the flip of a coin, and you said that you had a coin that was actually weighted on one side. You gave an example how a coin was weighted on one side, and over a series of flips, that coin had a 70% chance of, in this case, landing on heads.
Right.
Whereas in our software, we give you the edge, and maybe with our software, you have a better chance of being right or having a winning trade if you get in on a certain pattern.
Right.
You also talked about how
It's the word right that's really critical here. Okay.
Right.
It's the word right. In other words, what people need to understand is how does believing in a random result affect your expectations? Because see, what we don't want is we don't want to get into trading with the possibility of being disappointed, or the possibility of being dissatisfied, or being even betrayed, because a lot of traders feel that way. They really feel betrayed. And the problem is that when that potential exists, it has the effect of affecting the way that we see market information in detrimental ways. Because, in other words, all of us have these mental pain avoidance mechanisms that affect our perception of information.
Right.
So, for an example, if I'm in a losing trade, and I got into this trade thinking I was going to be right. Okay.
Next
In other
week
words, I
is
did all my
NFP week, no?
evaluation, I did all my analysis, I
Or
did
no,
my work, I
tomorrow
built the
should
case.
be.
Right.
No.
It's like as the
Next
market's moving against me, I'm going to have the tendency to focus on information that tells me that I'm right and ignore the information that tells me that the market is actually trending against me.
Okay.
In other words, I can identify
was
a trend,
NFP week
but I won't
last
be able to
week?
identify that trend if I'm putting an inordinate amount of significance on the information that's telling me that I'm right, as opposed to ignoring the information that's telling me that I'm wrong.
USD CAD.
And see, and overall, if we want to be consistent, the principle that we need to keep in
Take
mind
an
is
L.
that to be consistent, we have to cut our losses.
Yeah, bro,
and
my
let our
stop
profits
loss
run.
still
We have to
technically
make
hasn't
more
got
on our
hit
winning
yet.
trades than what we lose on our losing
As
trades.
long as it's like
And the
hasn't
problem
went over
is
this
that if
high.
I'm susceptible to being
But low key,
disappointed or
I mean,
betrayed, meaning I get
it's
into
not
a
looking
trade,
very good, bro. It already should have
expecting it
went
do
to
what I think it's
profit,
gonna do,
truthfully.
that
So if y'all
I'm
are in
going to
this
have
trade and you're
tendency
not feeling it, like I'm not feeling
distort
it, bro,
market
you could
information
close
that causes me to
early.
hang on to
You
my
wouldn't take
losers.
that big of a
And in a
loss. You
winning
take like
trade, what'll
half of
happen
what
is that
you'd
instead of letting the
actually
waiter
be
run,
taking. But I
markets don't go
personally don't
straight up.
close.
In other
I
words,
don't
if
close
I'm
at all. I said it. I forget it. I am letting this
long
shit run.
trade,
So it's either gonna hit my
like the
stop
market to
loss
go
or it's
straight
gonna
up,
hit my
but
take
they
profit.
don't.
One
They
of the
go
two.
up and they come back and they
We
come,
will
and
stay
it's the
patient though. It's
retracements we
totally up
focus
to
on
you.
instead of
This
the
is
fact
not
that the market's
financial
still trending
advice
in
and
our
never
favor.
is.
You're
Do
saying
your
right
own
here,
research.
basically,
Do
is
your
I
own
found a stock, for
analysis.
instance, that I love.
Take your
The
own
stock just had a
trades.
great news story. The
Always,
charts
bro.
are the same as the other stocks that I've traded, but just for some particular reason, I feel great about this stock. Don't know what it is, but maybe they had some great news out, and I feel that stock starts to go against me. You know what? Based on the news that's out there, based on the special feeling I have about this stock, I continue to hold my loser. I continue to hold my loser until this thing draws down against me, and I'm in a major losing position. And I keep losing because I feel in my mind that I had some sort of special. This stock was special. Is that what you're referring to? Or?
Yeah, it could be anything.
Because I know traders do that.
Yeah, I know. It could be any variable kind of information that people latch onto.
Okay.
The thing that they have to understand is, regardless of the reason that they got into a trade, it doesn't. Regardless of the reason, if other traders don't buy into that reason, or if other traders don't have a
See, if you would have
another
taken
reason
this market
to wanna
structure shift, you
buy
would have
at a
got
price
fucked,
that's
bro.
worse than yours.
You
bought
would have
the
got
stock at
fucked.
10.
That's why
Someone's
we
gotta wanna
didn't
buy it
take
at
that
11.
market structure
Someone's gonna
shift
wanna buy it
here.
at 12
That's
and
why
buy
we're
it at
waiting for it
13.
up here.
And not only be able to
Now
buy
the
it
market
at 11,
structure
12,
shift
and
point for
13
me
and
is
14,
right here.
they're going to have to take out all
We'll
the
wait
offers,
patient
all the
though. We're
traders who
staying
think
patient
it's
on
high.
AU.
In other words, at 11, 12, and 13.
Staying patient on AU,
And so
waiting for Euro.
if these people aren't coming into the
All right,
market to
so
do that, well, then whatever
good
reason
sign
they thought
right
they had might
here
not be so good.
that I'm
And so
seeing
that's
is
why
this
it's so
fair value
critical
gap
to
got
predefine
created,
your risk
right?
before you even get into a trade.
A bearish
And that's
fair
why
value gap.
professional traders
So
don't
as
think
long
about
as
it any
price
other way,
respects
because
that
they know
bearish
it
fair
takes
value
other
gap, we should
people
look good. You know what I mean? We could look good.
My reason might be great, but if someone else isn't
But if
buying
it closes
into it,
over
what
the bearish fair
difference does it
value
make?
gap,
It
it's
doesn't
like
matter
it
because it's not a
invalidates the
winning
shit.
trade.
So I just
And so,
delete it.
and so if we have this susceptibility to
Again,
be
I want to see it
disappointed,
close below this
what it
fair value
does,
gap here.
it affects our perception of market information.
Right
in
now,
a
it
way
looked
that
like it
doesn't
was
allow us to
holding,
cut our
and then it
losses.
failed to hold, and now it's looking like,
Changing it
yeah,
by
it's looking like this
changing
fair
your
value gap, this
perspective on
bearish
this, by
fair value
really
gap.
understanding
So
it. For
bearish
example,
PDAs are getting
you ever play the slot
respected,
machine?
and hopefully it's going to close below
No,
and
I don't like it.
disrespect this
You
bearish,
okay.
or
But I
I should
played
say
it.
bullish
For whatever reason you don't like
PDA.
it, doesn't matter, okay?
Bearish PDAs
That's
getting
good that you didn't
respected,
like it,
bullish
because it might
PDAs
make the
get
example even
disrespected.
better.
Fuck 'em.
Okay? Okay?
See what
You
happens,
play the
bro.
slot machine. When,
Let's see what happens.
You put
We
your
are
money
still
in
in
the machine.
there
Let's say it's
like
a quarter machine.
swimwear, dog.
You put your money in the machine.
We
you
are
press the
in there
button,
like
and the
swimwear,
pattern
dog. Let's see what
indicating
happens,
there's a
dog.
payoff doesn't show up. How do you feel?
Let's see what happens,
Well, you
man.
feel betrayed? You feel betrayed by the machine?
No, not
Okay.
at all.
And why do you not feel betrayed by the machine?
It's just a random. It's just.
Oh, it's a random outcome.
Taps into
Okay.
the fair value
in
gap
other words,
again.
you went into it with the belief that you know that you're participating in an event with a random
Respect
outcome.
it, respect
And as a
it,
result,
respect
your
it. No.
expectations about the outcome were in perfect alignment with the event itself.
My expectation, believe it or not, was to lose. I know this sounds crazy, but when I put the quarter in, I thought, you know what, I'm probably going to lose this quarter.
Yeah, exactly. Okay, because the odds aren't exactly in your favor, and what trading systems can do is actually put the odds in your favor in a way where we own the machine. Believe it or not. I mean, this is the whole role reverses if you learn to think about it correctly. In other words, if you understand that, so for an example, well, let me backtrack a little bit and say that most traders, if you compare trading to a slot machine, the difference would be that with a slot machine, we can't play until we've accepted the risk. In other words, we actually have to take our money out of our pocket and put it in the machine, or otherwise we can't play. Right. So that implies that we've accepted the risk, because the degree to which we have not accepted the risk, we wouldn't be able to put our money in the machine.
That is our loss. The quarter is our loss.
That's the risk. No, that's not our loss. That's just the risk. That's just how much we're willing to invest to find out if it's going to work. Okay?
Mm-hmm.
And then what we do is we wait for a pattern to show up. And if the pattern's, a jackpot, great. If it's not, then we might be willing to put another quarter in the machine to find out if it is. The difference with trading, and this is where people's mental idea of what this is all about gets messed up. The difference with trading is that the pattern shows up in the market. First. The pattern shows up first, okay? Then what we have to do is put up our money, meaning how much am I willing to risk to find out if it's going to work? But most traders, because they evaluate, because they judge, and because they analyze, they think that and build a case for the pattern being right. They actually talk themselves out of believing that the risk.
About like intermediate term highs, long term highs, and all that other cool stuff. This is long term high right here,
that I said in the beginning,
and then short term high here, intermediate term high, short term high, short term high. As long as this high doesn't get disrespected right here too, bro, because intermediate term highs, ideally they hold the direction, as long as the direction is true and correct.
And what they have to understand
so we'll
is that this
see,
is
bro.
not a
We'll
right
see.
or wrong game. This has nothing to do. Trading a technical methodology or a technical pattern does not have anything to do with being right or wrong. It's just an odds game. That's all it is. In other words, you get an edge that says I've got the odds in my favor over a series of trades, but you've got to be able to take every single trade because you don't know the sequence to wins and losses. You got to be able to identify what your risk is, and that's simply how much am I willing to spend to find out if other traders are going to come into this market and bid it higher than my price or offer it lower than my price if I sold. That's all it means. And then, of course, you have to have a money management plan for how to take consistent profits.
Right. Which
it looks like it's going to stop us out.
Oh, yeah. But see, the thing is like when you change your perspective.
Like I said, bro, it's all a part of the game, dude.
It's like
Don't
I
trip
know
about
there's
it,
a
for
random
real.
outcome
Do
to
not
these
trip
patterns.
about it. It
And so,
happens, dog.
I know it's not right or wrong, and so what potential do I have to get disappointed?
This could be
No
the
more
market
potential
structure
than
shift.
what you had to get disappointed by putting a quarter in a slot machine and it didn't come up with a
It's
jackpot.
honestly the market structure shift point right
this
there.
is a critical thing here, Jared. You got to be able to change the way you think. This is what's the title of this program?
That could be the long right there. If you want to stay a little conservative, you could wait for this one right here. Whoa.
Is there obviously?
You want to stay a little bit more conservative, you can wait for this high here.
And your thinking is certainly a way to do that. Is there anything from this point forward a trader can begin to do, or thoughts that traders can try to add to the repertoire to
right now it's inside of the 15-minute
trader, have that carefree state
breaker
of mind
block
and start to change the way that they view
1 minute.
risk. Is there
market structure shift at this point?
Absolutely. I mean, there's
technically
there's
this is a mitigation block.
Exercises in how to think like a professional trader, and basically all it really takes.
We went long right here. Stop loss would be about 3 pips.
God, it's just like anything else in our lives. When we realize that there's a particular goal that we have, and a strong
personally
desire to achieve that goal, then we're going to take whatever.
I would
steps we
stay
need to
patient
achieve it.
and just wait for this
Whether
high
those
to get
steps
ran.
are trading in the
But
zone or
this
how
is
to
a
think like
solid
professional
setup in my
trader or
eyes.
some other methodology that people are more.
I'm
comfortable with
personally
or
not
whatever.
taking it.
The point is that
Yet,
if someone really.
but I fucking
really
should have.
sets their
Damn it.
mind, any of us, when we really set our mind on
Okay, we
getting
got
something,
stopped out here, so we
we'll
took a
get
loss here. That's
we
okay.
will get there, but the difference is, like we started out in the
Minus
beginning of the
1%
program,
on there.
The difference
That's
with this
fine.
is that what we have to set our mind at is how to change.
Alright, watch. I'm gonna update the chat.
Looking for a broker that can match your drive and ambition? Don't settle for second best. Discover an elevated trading experience with Forex.com, the #1 broker in the U.S.,
Oh,
and unlock the
shush.
tools.
Oh, shush.
Okay, and that's why there's so many people who are so close to getting it, but never really get beyond that
What's that
threshold.
hurdle? Why can't?
Because
and I
people
see-
don't want to change the way they think. It's that simple. People don't like changing.
How can people get to the carefree state of mind that you talk about?
By changing the way that they think. They've got to eliminate the potential to think that the market's going to disappoint them. They've got to eliminate the potential to think that the market's going to disappoint them. And the way they eliminate that potential is by understanding that trading is not about being right or wrong. It's a probability game.
Right.
If you're trading technically. Now, I don't want to confuse people, but I got to say something else. Is that traders do
You got an
evolve.
hour and a half, by the way. Keep
We
going.
do? Oh, yeah. You got that long, honest to God?
Go ahead.
Oh,
Just
my.
go ahead.
Let's see, bro.
That
Let's
there
see.
are stages of
AUD.
development. In other words,
Depending on her to
and
make
I
us
think we
back,
started
huh?
to talk about this
Nah,
in the
we're
last
not
segment,
revenge
is that there are
trading, though.
stages of development.
Absolutely do not
That-
revenge trade.
That we start out learning these fundamental skills, like learning how to think in probabilities, so that
The only
market
reason
doesn't
why
have
we're
this
still
potential
looking
that
at her
causes
is just
us to feel
because there's a
emotional
setup
We did
potentially on
everything
our
we could. We
hands.
had our edge. It didn't work out.
That's
Move
right.
on.
And that's all
That,
it is.
you know,
When you put on a trade,
It's
and
game
it doesn't work,
probabilities,
all it
bro.
really-
Listen to
all it
Mark
really
Douglas
means-
preach
all
this
it
whole
really
time,
means
bro.
is
It's game
is that-
probabilities, dog.
is
We
that
gotta
some other traders
we gotta just
didn't come into the market that
manage
had
our
the
risk,
same
dog.
belief that you had, or the same
This
conviction
next trade
you
that I
had about
take,
this market doing
I
whatever
think
it
I'm
is
gonna
it thought
go
it was
for
gonna
a
do.
0.5% risk
It's nothing more than that.
instead of a 1%
But you have
risk.
to learn to walk away. I mean, let's put it this way: how good do you think
So,
the average person is
let's see, dog.
at
Let's
predicting
see,
other
man.
people's behavior? In someone else's behavior. Not people aren't that good at predicting other people's behavior.
So it's gonna close above
Or
there.
even their own behavior, for that
This
matter.
last
Okay?
up close
They
candle
find
right here.
themselves doing things that what am I doing
Price
this for?
taps
you
into
know?
that. That's gonna be my
so
entry.
how good are they going to be at predicting collective human behavior? Now, the methodologies
Now that market structure shifts.
that we have access
My
to,
stop
these
loss
mathematical formulas,
will be right
do
here
that
at
for
4
us.
pips.
But you have to understand that there's no possible
Okay,
way
I'm gonna
that these
update the
mathematical
chat.
formulas can predict the outcome of these patterns.
Damn, it's
on
just
a
gonna fly away, watch.
trade basis.
Just because the
Only
entry was
on a
actually down
series
here,
of
like I
trades.
said.
In other words, what they're really saying is that I have the odds. So when I get a signal from my methodology, at the very most fundamental level, what this is telling me
Right.
is that fresh cross. There's a higher there's a high, or let's say the odds are in my favor. The odds are in my favor that somebody is going to come into the market. This is what the pattern means.
Right.
The odds are in my favor that somebody is going to come into the market and bid it higher from here if I bought, or offer it lower from here if I sold. That's all it's saying. Now, they're either going to come or they're not. And so, as a result, I don't look at this as being a right or wrong. I look at this as how much distance am I going to give the market to move away from my entry point to tell me that they're either going to come or they're not, and any further is not
Okay.
worth the money of
I
finding
just
out, not
updated
worth
the
cost of
chat.
finding out.
If y'all aren't in that
That's all it is.
Telegram
Talk about
chat,
stop losses,
drop
you
links
talk
and
about
all that
stop
cool
losses
stuff,
and
man.
management in your deals.
Yeah, absolutely, but not.
That's
but
my
not
entry
like,
right there. I have a buy
very
limit set
specific,
there.
Not the kind of specifics that like.
Other
if
thing,
you're
though,
using, if you're in a half an
we
hour
also have
time
this fair
frame,
value gap right
how much,
here.
how
Well,
much
that's the
of a stop
trader's
loss is.
decision.
Yeah.
But the trader,
Which you could take an
depending upon
entry
their
off
trade
of that,
style, is
but
going
it's
to
gonna
adjust
stunt
their
the
stops
hell
according to
out
their
of your
account
risk
size,
to
according
reward.
to the risk
Exactly.
tolerance, etc.
Right.
Because if
What
we
you
went
do,
right
I think,
there,
is give people an
or stop
understanding and a
here,
basis of where they should be
it'd be about
placing their
5.6
risk, or
stop
how
loss.
much,
See, our
not
1 to
from a
2
dollar
becomes a
perspective,
1 to
but
4.
maybe from a
Yeah, in other words, so that
So
they
I'm
can,
gonna leave it.
from a mental perspective, so that they can adjust their trading style in a way that conforms to where they're at in terms of
Might
their-
even be able to
their
put
ability
it like
to take the risk.
your stop loss under the first
exercise
candle
be
of
for
the
a trader to begin testing out their loss.
FEG
In other words, take a
pattern.
$100 loss, see how you feel. If you were able to take a $100 loss
It's
and walk
totally
away, not
dependent
fret too
on you
much
as a
about it,
trader,
not
bro. Where
stress
do you
out
want to
over
put your
the
stop
results of
loss? Do you want to
trading
be
day
more
and not think
conservative
about
with
it.
your stops?
Maybe then you can
Or
say,
do you
okay,
wanna be
I'm
more
gonna trade
risky with
more
your
volatile stock
stops?
and move to something like a $200 or $300 loss, etc.
Personally, I like to be
Exercise you can do
conservative. It's better
Absolutely.
for my
Yeah, absolutely.
psychology.
And that's,
It's also
what I
better for
suggest
my
to people,
account.
all the time. Especially, I was doing coaching. It's like,
And I only target
when
1 to
when
2s
doing
usually,
coaching on an
so.
active basis. I mean, I was coaching some
fine.
pretty,
It's
pretty
fine. It's
substantial
fine.
money
It's
managers,
fine.
and they get into a situation where they're on a pretty good losing streak, and often it required that they actually go back to a risk level that they hadn't meaning that if they were trading, 10,000 or 100,000 shares or willing to take, a $500,000 or $1 million hit on a trade, to get back to where they felt more in sync with the market, that they may have to go.
I wish I could go back in time and enter on this freaking
when you're working
down close candle right here whenever it tapped into this mitigation block.
Traders, that's often a hard thing to do, but that's exactly what they needed to do.
Those are lessons you learn in the markets, you know what I mean, every day. Making rules.
Okay, a lot of people who teach trading say
So I'm gonna make a recap video of this whole week. I'm gonna go over the rules and the market conditions that I've learned to adapt within as well. One of them is if the 15 minutes already market structure shifted off of a 4-hour PDA.
Consistent money.
Another one is going to be this one right here.
Then they start doing real trading, and everything
It's pretty much like a mitigation setup.
Well, and so a lot of teachers have said, well, there's no point in paper trading because there's no correlation between the results. Well, that's not really true, because what paper trading can do for people is very beneficial. One,
you took it right there, and then put your stops under the first candle here.
Graphic demonstration of the
about a
gap
2.5 pip stop.
In terms of mental skills that they need to acquire.
1 to 2R would be hit quick.
It's a good way to get familiarize yourself with your trading platform.
I wouldn't do it personally.
It's a good way to really get confident with your
I'm
methodology.
just not that risky.
But more so, it is a graphic representation.
I'd rather protect my capital.
Skills that you don't have.
I could never go on vacation. Running my renovation and contracting business took up all of my time until
that you don't. That's an interesting concept. Yeah. So in other words, how does someone convince themselves that they need those mental skills? Look at your paper trading. Yeah, look at your paper trading in relationship to your real trading. Now,
yeah, bro, we missed it.
If there's and a lot of this, even if people have learned to think in probabilities, which is what we've been talking about pretty much this whole time, even if people learn to think in probabilities, it doesn't mean that they can really still accept the loss,
right?
Because the way our minds think. In other words, if I have to take a loss in this trade, it could have the
deleting
tendency
it.
to take me into all the accumulative kind of negative pain of every time I've had to take a loss in my life. And it just doesn't mean in trading. It could mean, pets or what, people and that sort of thing, or jobs. And so, because our minds have this tendencies to associate, it can make it difficult to accept the loss. So a lot of times what people would have to do, and they also would find difficult to do, because a lot of times people get into trading because they want to impress their friends or their family, like, I'm a trader.
Right.
But what they might have to do is that when they graduate from paper trading, they might just, the amount of risk tolerance they have might only be just 10 shares and risking $1 on those 10 shares. And you think, well, what's the point of that? Well, the point of that is that, when you can trade those 10 shares flawlessly based on whatever your methodology says, and do it without any fear or
because you were able to make those trades in the paper. I mean, you made those trades in the paper.
Then you can go to 20 shares and see how that feels. Then you go to 30 and gradually work your way up.
Yeah, bro, I removed my buy limit on it.
This is a concept that we've never even talked about.
I removed it, so
I have to be honest with you, where you look
we're not going to take that one.
Kind of almost your goal, if you will. Almost like, this is where I could be if I was trading from a carefree state of mind.
Absolutely. It's perfect. This is where I could be if I had that carefree state of mind. If I had the mental skills that allowed me.
Yeah, bro, the entry happened on this down close candle right here.
Without hesitation.
I'll kind of break it down for y'all real quick. Watch, let me turn off this. What was I looking at for the day, bro? Why was I looking at AUD USD to fly like it is now? Why was I also looking at Euro USD to melt like it didn't? So, starting from the 4-hour time frame, we look right here, bro, and let me close off this. Let me just, because we don't, bro, we truly don't. We don't need those numbers. All right, so breakdown right now. So 4-hour time frame on AUD USD starting from the top. My higher time frame alignment, my higher time frame is going to be the 4-hour time frame. As you see here, price has expanded, took out external range liquidity, retraced into internal range liquidity, expanded, took out external range liquidity, and today, this morning, it was retraced into internal range liquidity, this fair value gap, okay? Right here. So now that it's tapped into the 4-hour fair value gap, we need to see a 15-minute. That's our intermediate time frame. We need to see a 15-minute market structure shift bullish before we even look for bullish opportunities, okay? We seen it. It tapped into that 4-hour PDA. Then it had this last liquidity grab right here, took out the low here, and then market structure shifted and closed above this high right here. That created this last up close candle. It created a breaker block. This is a breaker block setup. Okay. So once this candle, 15-minute candle, tapped into the breaker block, we go straight to the 1-minute time frame, and we then began looking for a 1-minute market structure shift bullish. So this is that moment it tapped in. Where's the market structure shifting point? It's way up here, right? So it creates this new market structure shifting point, this new one right here too, as it starts pushing down, comes up, it doesn't close over it, pushes down more, taps into this liquidity right here, and it's in this 15-minute breaker block as well as this 4-hour fair value gap now at this point right here once it pushes back down. Then it comes up, closes above this high right here, right? This is not the market structure shifting point. Why is that not the market structure shifting point? Because market structure shifting points come from the actual swings themselves. So this swing right here, this would be like a market structure shifting point, right? This swing right here would be a market structure shifting point. It has to be the areas where it actually turns price. So like this leg right here, this high is part of a leg. It's not part of a turning point, an area of turning. So that's why this high right here, that's why this one, if I delete all of this messiness, that's why this high right here is a market structure shifting point. Because notice how price came up to it and it tried to push down to create a lower low. Instead, it failed and it closed above it. That's a market structure shifting point. But with this one right here, whenever it came down right here, it didn't really, it's still part of this leg, you know what I mean? All it did was turtle soup this high. It just turtle souped the high. That's all it did. But with this one, it was an actual turning point. Okay, so that's why this isn't a valid market structure shift. Once this candle closed above, that's not a valid market structure shift. That's why we've seen it melt one more time, come up, and then try to create a turning point. It did not try to create a turning point here because there was no turning point to be created, bro. It was already expanding down towards external range liquidity. But this point right here, it was retracing into internal range liquidity, created a turning point for external range liquidity. Okay, I hope that makes sense. I hope that makes sense what market structure shifts are and how you can really like decide which is which. So you have the turning point market structure shift right here, the high right here. Once this candle closed above it, this last up close candle before this potential down move, this becomes your mitigation block. Why is it a mitigation block? It's because this low didn't take out this low. This becomes your mitigation block. So once this candle closed above it and this candle tapped into it, that's your entry right there, which we missed. I fucked up. It happens. Stop loss always goes below right here. Okay. About a 3.3 pip stop loss. And then you could target the highs. Always usually target the 4-hour candles highs. So like this high up here would be my target. Or even external range liquidity on the higher time frame is my target there. So that's how I would have traded this. And we could potentially see this fly all the way up to there. It'd be a 1 to 5R. But you know how I like to do it. I like to stick to like a solid 1 to 2R. You know what I mean? And obviously it hit that 1 to 2R like nothing. That's how you would have caught this trade, bro. That's how we would have caught this trade, bro. And I was trying to be a little bit more conservative and I fucked up on it, but that's okay. It's all a part of the game. You know what I mean? But see, you guys, for the homie Naveen, bro, 1 minute time frame is not choppy, bro. That shit is so simple, bro. It's all fractal, dude. It's all the same thing. If you could trade the 5 minute, you could trade the 1 minute. I don't care. Don't let nobody tell you different, bro. You're a badass, okay? Do not hold yourself to the 5 minute. Allow yourself to grow into the 1 minute, bro. That was what I was looking at for AUD USD. Now Euro USD took a loss. It's all a part of the game, right? Now, why was I looking at Euro USD to sell? Well, yes, it had this big bullish push up, right? And if we notice too, though, as it was retracing into like some potential areas of interest, it was doing like some little expansions, retracements into internal range liquidity, respecting the bearish fair value gap, expansion into external range liquidity, created another fair value gap, and price this morning was currently in this internal range liquidity, right? And my anticipation was that we could potentially sell off into this bullish fair value gap, right? So that's what I was looking for. At the same time, too, from this bearish fair value gap on the 4 hour, I was looking at the candles. Notice how this black candle, if I erase this, if I erase, no, let's not erase that because that's the FBG right there. But if you notice, this black candle, it wicked above here, wicked above, and then closed within the range, right? After that, this next candle created a lower high wick, and it closed below this wick. And it closed near this one, right? And so with that, my anticipation is that price is going to run even deeper and further away from this low here and take out this low of this candle wick, right? That's my anticipation by reading the candles, okay? And you can read the candle, bro. If you want to learn how to read candles, you could learn it from my YouTube channel, or you could learn it from like Romeo, who teaches his CRT. And bro, CRT is super flawed, but he does teach some good shit about like the candle reading and shit. So you can always learn some shit there. But you can learn it a lot from me too. I definitely know what the fuck I'm talking about. Anyways, so that was my anticipation, was that this next candle right here at 9 a.m. was gonna open, create a high, and then go lower, take out the low of the previous candle, and then close off. So that's why I was looking for a bearish opportunity. Another reason why is because if we notice how from it's Thursday 8th at 1, Thursday 8th at 1, which is right here, Thursday 8th at 1, see how there's some SMT divergence here as well. So there's SMT divergence, bro, because GBP USD made a higher high, Euro USD made a lower high, bro. That is a cracking correlation amongst correlated assets, okay? And then if we look at DXY, well, we don't even need to look at DXY because there's a cracking correlation amongst correlated assets right here, bro. So right there, that gives me more conviction for a bearish put, like a bearish sell-off, you know what I mean? So now going to the 15-minute, what I'm looking for is at the 9 a.m. candle, which is this candle right here, I'm looking for it to open, go higher into a 15-minute point of interest, like this external range liquidity for a turtle soup, or there is a 5-minute fair value gap right there as well. Because sometimes whenever there's not a 15-minute fair value gap, look for a 5-minute fair value gap. Just drop a time frame below, right? And so that's what I was looking for here. After it took out that external range liquidity for the turtle soup, bro, that's whenever I was looking on the 1 minute for that market structure shift. And look at, we did have it, bro. It was valid. You know what I mean? This is a turning point, pushed up, took out the high, broke below it. That's a breaker market structure shift, bro. This is a breaker block right here, dog. So once price tapped into that breaker block, we were in there, bro. Dude, this whole setup fell in line with our strategy and our approach to trading, bro. Like, truthfully, it just didn't work out in our favor. And that's what happens sometimes in trading. Shit just doesn't work out in your favor. You know what I mean? There was many things that provided a bearish, you know, bias compared to a bullish bias for me. And you might be different, you know what I mean? That's why trading can be very subjective versus objective, you know what I mean? But I like to try to do my best to keep it as objective as possible. All of this went in alignment with my strategy and approach, bro. So the fact that I took a 1% loss, I'll go back and see what I did wrong, what I could have done better. But at the same time, man, I don't know. I didn't think it was a bad trade. I thought it was pretty decent. I thought it had, I thought it had opportunity, bro. Opportunity doesn't always unfold in these markets, though. It's all good. AUD USD looked great, though. It fucking flew. That's beautiful. And I'm not hurt by the fact that I didn't catch this. I'm more happy at the fact that my direction was correct from the jump. You know what I mean? I was predicting that it was going to go bullish like this. I was predicting that it was going to do what it just did. I didn't catch it, and that's okay. But I was right. In my mind, I know that like as long as I keep doing what I'm doing, I will long term be profitable, bro. Just keep trading, bro. Keep the same approach. Dude, for this week, we are up 8%, bro. Like, dog, we are up 8% for the week, bro. Like, if you're tripping about a loss, dude, you have a lot of growing to do in trading, bro. Truthfully. Never stress about losses, bro, because they are all a part of the game. Just like Mark Douglas was saying earlier, bro. He had a homie who fucking lost 90% of the time, but the 10% he was winning, they were monsters, bro. That's truly all it is, dog. Just make sure that your risk is always managed, bro. Like this trade that I was going to take on AUD USD, I cut my risk, bro. I'm up 8% still after that 1% loss on Euro USD. I'm up 8% still, but I cut my risk. If I would have took this trade, I cut my risk to 0.5%. Why did I do that? So I could protect my capital, bro. So I could protect my profits, dude. Now imagine if you're up 8% on the account and you risk another 1% and then it fails against you, bro. Now you're only up 7% on the account. And then you take another 1%, fails on you, bro. You're up 6%. You take another 1%, you're only up 5%, bro. Now imagine you cut your risk from that 8%, and now you're risking 0.5%. You're down 7.5%. You cut your risk to 0.25%. Now you're down 7.25%. You cut your risk even less than that, or you keep it at a quarter. You know what I mean? It's totally up to you. But imagine that, bro. You're still at 7% profit versus being down to like 5%, 4%. Bro, you're giving away all your profit, dude. No matter how much you're up on your account, if you take a loss, cut your risk, bro. The name of the game is protect your capital, dog. Manage your risk, bro. It does not matter what you're doing, bro. Throw an indicator on this shit. Watch. Throw a multi-time frame EMA on this hoe, dude, and freaking put it. This is gonna be some bullshit. Don't really do this, but like you could fucking do this shit, dude. Look at a 54 hour, 50 EMA, right? Whenever price closes above it on the 15-minute or some bullshit, take an entry. Look at this bullshit, bro. Once it closes above, long position. Boom, stop loss right below that candle we just took a log on. It's a 7 pip stop loss. Look at this monster of a trade that you could have caught right there. A 1 to 8R, 1 to 9R pretty much, bro. Monster trade, right? And then look at this one right here. Same thing. You take the sell right here, right? Stop loss right above. 10 pip stop. Hits a 1 to 2. Hits a 1 to 2, but you get stopped out, right? So let's say you take a loss, but you make it back with the monster, right? Let's say you take your entries right here. Bro, that's what I'm saying, dog. You could literally do anything, bro. You could put yourself in profit so easily, bro. It's not hard to see profit in this game. What's hard for people in this game is controlling their risk, bro. A lot of people don't know how to manage risk, bro. A lot of people don't know how to freaking keep their account alive and protect their account and, provide longevity to their account, dude. A lot of people don't know how to do it, bro. You have to know how to do it, bro. If you're starting from a $0 balance, dude, $0 balance, risk 1%, right? Risk a 1%, dude. If you lose that 1% and you're down 1% on your account, risk is 0.5%, bro. Okay? Target a 1 to 2, make your 1% back. Go back to break even, then up your risk to 1%. You know what I mean? If you lose this, then risk 0.25% next trade, bro. Target a 1 to 2R, make your 0.5% back. Then next trade, risk 0.5 again, and then hit a 1 to 2, get your 1% back, then go back to 1%. Bro, it's all about making back your initial what you lost, bro. Cut your risk and try to make back your initial loss, bro. You know what I mean? Then up your risk again, dude. Like, truthfully, why? Like, if we psychologically think about it, if you're on a losing streak, bro, why are you gonna continue to risk 1%? Why? You're just gonna drain your account, bro. Your emotions are high. You're revenge trading. You're like, I don't know what the fuck's going on. It's all fucking with me. It's getting to me, bro. Like, Why are you going to continue to risk 1% when you're on a losing streak, when your emotions are high, when you're like really questioning if you know what you're doing? Why would you do that, bro? Just cut your risk and protect your account, bro. Protect your capital, dog, all day long. Like, protect it. Even if you take a fat winning streak, you're risking 1% the whole time. You win a 1 to 2R, you're up 2%. You risk 1% again. You hit another 1 to 2R, you're up 4%. You risk 1% again, you take a loss. Now you're up only 3%. You lost a percent, right? On that next trade, cut your risk 0.5%. Protect that last 3% that you have, bro. Protect that last 3% that you have, bro. In profit. Protect it. Cut your risk to 0.5% on that next trade. If you lose again, you're going to be up 2.5%. Cut your risk to 0.25%. Now you hit a 1 to 2R. Now you're back to 3%. Risk 0.5% again. Now you're back. You hit a 1 to 2R. Now you're back up to 4%. Risk that 1% again. Boom. Now you're back to 5%, 6%, bro. And that's how you run it up. Risk management is key in this trading game, bro. You could have any model, any approach, anything, dude. You could use the Ichimoku Cloud, bro. You could freaking use the Kiju-sen, close over with the freaking Tenkin-sen crossover, and the Cloud crossover with the legging span. Bro, like, you could do anything in these trading markets, bro. You could use Heikin-Nashi candles, and whenever they go from red to green, you take your entry and you put your stop loss above the red. Bro, you could literally do anything. Get that in your head. You could literally do anything. No matter what your approach is, just make sure that your risk is managed and that your winners are always bigger than your losers, okay? On that point, I'm going to end the stream here, you guys. I hope you guys had a great trading day. I hope you guys learned something. I'm going to be back on Monday, and we're going to be trading a live challenge, a funded challenge. We're going to get funded, bro, in front of your guys' eyes. I'm also going to post a recap video of every trade we hit this week, as well as losses, how we managed our risk, how we were able to end the week on an 8% gain, bro. You're learning a lot here with me, bro. This is Hot Shot in advanced, bro. 2023 Hot Shot was still a novice, dog. 2024 Hot Shot is a whole different beast, bro. I want y'all to understand this, dude. This is a whole different monster that I am fucking giving y'all, bro. So, I hope you guys learned something. Until next time, y'all. Thank you for coming out. Later.